So, what's the story behind this concept of doubtful debts and bad debts? We know that in their usual course of businesses they make a lot of credit sales. And when they sell goods on credit, that gives rise to a balance which we call debtors. So, for debtors, I know these are the people who owe me money. Now, the question is, obviously these debtors I'll have agreed some I would have already agreed some credit period with them, so they are supposed to pay me back the sum that they owe me at the end of a month, 2 weeks, 3 weeks, whatever their period is. The thing is, do all the debtors pay their debt on time? The answer is no. Okay. The other thing is, some of them they pay late, some of them they pay very late, and some of them they never end up paying me. Okay, it's not just something that I'm saying about personally my business. Generally, if whenever you're running a business, this is a situation that you would run into. So now we have this concept, we have got two options. Either we wait for the debtors to not pay us, and there would be certain debtors who are not paying us and not paying us and not paying us, and we are still carrying around their debt in the form of debtors in our books, but that's not a prudent approach. The prudent approach is that I make an estimate that out of my total debtors, how much of them would pay me and how much of them would default in payment. So a business over its let's say course of its life and seeing the industry trend and otherwise, they develop an estimate that, for example, 1% or 2% or 2.5% of all the of all the debtors, the total debtor balance that I have, these are the ones which I'm doubtful about that they will not be able to pay me. Okay. And if so, that's doubtful debts. That's those are the debts which I am not sure about whether I'll recover their amount or not. And the other thing is that there would be certain people who would perhaps go bankrupt, or due to some other reason I know that they would never be able to pay me, so I write off their debt from my books. I remove them as being my debtors. These, the first case, the doubtful debts, I'm still carrying them around, but I make a provision that out of total debtors, I have an estimate that 1% won't pay me. Okay. And then there are the ones which I'm specifically sure about, that these are the ones who are never going to pay me back. Maybe they have gone bankrupt and there weren't enough assets which would settle my debt. So these are the ones that I need to remove from my books altogether. So these are called bad debts. Now the question is, how would I record the two scenarios? So for the second case, bad debts, initially when I make the sales, what do? I say debtors debit and sales credit, debtors account whichever that person is, and sales credit. This is the entry that I pass when I sell goods to these people. Debtors debit, sales credit. And when I eventually have to remove these debtors from my book, I'll have to credit the debtors. So whatever amount that person owes me, I need to now credit that amount because he's not going to pay me. What do I record as debit? I can't record cash or bank because they're not paying me. But if you look closely at the transaction, it gives rise to an expense. This bad debt is, it's an expense for the business. So I write bad debt debit. Okay. Acha ji. Uh, Another question, if I may ask, we have studied how many books of original entry? Six. Sales journal, sales return journal, purchase return journal, cash book, and bad debts. Sorry, cash book and general journal. So, in which particular out of these six books would this entry be recorded? Hmm. So there were six books. I'll write the names over here for you to recall. There was sales journal, there was purchase journal, there was sales return journal, there was purchase return journal, there was cash book, and there was general journal. So madam, in sales journal we record all the credit sales. In purchase journal we record all the credit purchases. Where do we record the cash sales and cash purchases? In the cash book. All cash related transactions, they are recorded in the cash book. Sales return and purchase return journal, they record the returns of the goods, whether by us or by us to someone, by someone else to us or by us to someone else. And whichever entry it doesn't get recorded in the previous 5 books of account, it gets recorded in general journal. So this bad debt, it's neither sales nor sales return nor purchase return, nor it's a cash book item, so it gets recorded in general journal. Okay, these double entries which do not have, okay, it would get recorded in general journal. Achha, so this is the concept of bad debts, that a person who is unable to pay me, I would write off his debt from my books and I would record an expense instead. Achha. Now, what about the doubtful debts? How do I record that? So the first thing would be that whenever I'm starting the business, there would be a particular year, either year one or somewhere down the road, where I realized that now I need to create a provision for doubtful debts. Because in the original state, when I start the business, there aren't any accounts around. So in the first year, either I make this assessment, or in the coming years, there would be one year in which this is the first time that I'm making the assessment that I need to have a provision for doubtful debt. Okay, provision for doubtful debt. So the first entry with regards to doubtful debts that I'll have to make is to create provision. To create provision for doubtful debt. So the entry for that would be that by whatever amount. So for example, I have the criteria that 1% of my debtors, 1% of my debtors, they would be my, that's the provision that I'm going to make for doubtful debts. So at the end of year in which I decide to create the provision, I see what is the closing balance of debtors. So closing balance of debtors, let's say for the sake of ease, it was 100,000. Okay, so I'll calculate 1% of 100,000, that would be 1,000. So I'll create the provision with this 1,000. And what's the entry that I'll pass to create this provision? I will say income statement debit, or I'm recording an expense in short. Income statement debit and provision for doubtful debts credit. Okay, by how much? By 1,000. Okay, this particular leg of entry, income statement, it would be deducted from the operating expenses of the business. Okay, and this provision for doubtful debt, it's a balance sheet item, it gets carried to the balance sheet, and this amount 1,000, it would be deducted from the 100,000 closing debtors that I had, and the net amount of debtors trade receivables that I would show in the financial statements, that would be 99,000. 100,000 of the debtors minus 1,000 of provision for doubtful debts. So if I make extracts of in financial statements for this particular year, let's call it year 0. Okay, so for year 0, I will say income statement bracket extracts. I would have operating expenses, and I'll write provision for doubtful debt. Okay, and how much is the amount that should be recorded as an expense? This 1,000 which I wrote as income statement, so it gets recorded over here as 100,000, sorry, 1,000. Okay, that's as far as this entry it would affect the financial statements, especially the income statement in this year. What about the statement of financial position? Let me create an extract for that too. Statement of financial position extract. What would I show in it? I would say uh, debtors, that would be 100,000 less provision for doubtful debt, which is how much? 1,000. So the closing balance would be 99,000 for debtors. Okay. Acha ji. Acha, so this was the story in year 0. If we move on to year 1, obviously at the end of every year, the closing balance of debtors, it wouldn't be 100,000. So let's say in next year, the closing balance of debtors, it turned out to be how much? It in year 1 or year 1, हाँ वो year 0 था. अच्छा वो year 0 नहीं होना चाहिए, it should have been year 1. Let me make this one year 1 and the next one year 2, because we won't make an entry for provision at start of the year. We'll need to have 1 year which has passed, at the end of which we are creating this provision for doubtful debts. Acha, so that was year 1, and now moving on to year 2, let's say the closing balance of debtors for year 2 is 200,000 for the sake of simplicity. Okay, so again I'll calculate 1% of it. So 1% of 200,000 comes out as 2,000. So now the closing provision of doubtful debts, it should be, or let's say instead of 200,000, it was 150,000, because that would make you understand what I'm trying to say. So, how much? 150,000. Okay, ji, now the closing debtors are 150,000. So if I calculate 1% of 150,000, that would turn out to be 1,500. 1,500. What was the previous closing balance of provision for doubtful debts? 1,000. Now what should be? This is the closing balance of provision for doubtful debt. Obviously, when we go to an actual question, perhaps this thing it would become more clarified for you. Right now, it might sound a bit ambiguous, but just bear with me for a bit. Acha ji, so this 1,500, it should be the closing balance. Now, what's the balance? What's the closing balance that I already have? 1,000. So it means I need to increase the provision by 500 so that its closing balance it becomes 1,500. So what would I say? I would again say income statement debit by how much? By 500, and provision for doubtful debts credit by how much? By 500. Okay. So now when I prepare these same extracts that I prepared earlier for year 1, now that I'm preparing it for year 2, so income statement extract, I would come down to operating expenses, and I would say provision for doubtful debt. And what would I write in the income statement? Just the 500 by which the doubtful debt balance has increased this year, this particular amount of 500. Okay. Between the two closing balance, usually if there isn't any other movement, it would be the difference between the two. We'll soon see what other things might influence it, and we'll prepare T accounts and do practice of further concepts as well. But for now, yes, it's just the difference of the two closing balances. If the closing balance has net increased, the provision, the remainder balance. So look at it this way: we already recorded an expense of 1,000 last year. We now estimate the total balance, it had to be 1,500. So we haven't recorded yet the expense of this 500. So that's what we need to now take to the income statement. Okay. And as for the statement of financial position extract, I'll now have current assets in which I'll have debtors. So debtors are how much? 150,000. Okay. And then less provision. How much is the balance of provision now? 1500. So that means the net closing balance of debtors is 148,500. ठीक है जी. So this is how the double entries did be passed, and this is how the the provision for doubtful debts balance it would move. There is one more scenario which could happen. Let's just discuss that and then we'll move to the actual practical examples. It could be that the closing debtor balance, instead of increasing, it decreases. Okay, so the closing balance, debtors balance right now at the end of year 2 it was 150,000. So how about at the end of year 3 it becomes 1250. So I write year 3, and at year 3 it is 125,000. Okay, so I'll again calculate 1% of it. 1% of it comes out as 1250. So that's what the closing balance should be, 1250, but right now it's 1500. So it means we need to reduce it by 250, right? So in order to reduce it, it was a credit balance, so I will debit the provision for doubtful debt. So provision for doubtful debt account, it would be debited by how much? By 250. And I would credit the income statement by how much? By 250. So if I'm crediting the income statement, it would show, it means that I am recording an income. Okay, so this I would show as other income. So if I get to the extracts that I draw, so let's say year 3 income statement extract, and instead of operating expenses I say in other income. What's the other income? Reversal of provision for doubtful debt. ठीक है जी. By how much? By 250. And as for the statement of financial position, extract. Acha ji, what's the amount of debtors that I have? Debtors. Debtors are 125,000. From it, I deduct provision for doubtful debts. Provision is how much? 1250. And if I deduct 123750. So this is how it would be presented. So there are three scenarios that we discussed. We learned how to create the provision. So in year one, what we did was, in year one, what we did was to create the provision. Then in year two, we learned how to increase the provision for doubtful debt. And in year three, we learned how to decrease the provision for doubtful debt. And we have already learned how to record the writing off of debts, as in if there's a bad debt, how do we record that? Acha ji. Now questions. Hmm. ठीक है. I'm sending you a question. Yeah, in fact, let me paste it over here. Just a second. So what we have to do over here is we have to prepare first of all the bad debt account for 3 years, then the provision for doubtful debt account for 3 years, and then the relevant extracts from the financial statements for all these years. Acha ji. So for the second one also the requirements are the same. I'm just telling you that they got cut out. Acha ji. So how do we go about solving this question? So first let's do part A. In part A, they're asking us to prepare the bad debt account. Okay. So I give heading over here bad debt account. Okay. So first of all, I have to do it for year 2001. So in 2001, what happens is that I've got bad debts that I have to write off. How much? 1340. So I told you the double entry to write off bad debt is bad debt debit, trade receivables credit, right? So by how much do I have to write off these bad debts? 1340, 1340, and I write over here trade receivables or debtors or that particular person whose account I am writing off. Acha ji, that's it for this year. So now I know that since this is an expense account, it wouldn't have a carried down balance. Instead, the closing balance it would get taken to the income statement. So I write to profit loss or to income statement. I can write either of the two. So 1340, and this would be the entry for 2001. That's it for 2001. And then this amount it just closes. Obviously for the PLT accounts, the amounts they do not get carried forward to the next year, right? Achha ji, for next year, we are told that there's a different amount that we have to write off. So for 2002, we have to write off 1720. So 1720 bad debt account debit and trade receivables credit. And that's it for this year. This amount it would get taken to PL. So PL debit and bad debt account credit 2002. This is 1720. That's it. Okay, ji. For the third year, we'll be doing the same thing. So for 2003, we write off a bad debt of 1410, bad debt account debit, trade receivables credit, and eventually it gets taken to PL or income statement 1410 2003. Okay, ji. That's it for part A. Acha ji. For part B, what do I have to do? I have to calculate, I have to prepare the provision for doubtful debt account. So let me make it a tiny bit smaller so that hmm. Acha ji, in order to go for provision for doubtful debt, acha ji, I write provision for doubtful debts. Acha ji, I am told the trade receivable balance for each year, and I am told the percentage by which I have to make the provision for that year. Acha ji, so in the beginning it wouldn't have a brought down balance. The brought down would be zero since there wasn't an account. This is the first time he's preparing this thing. Acha. So for 2001, what I'll do is I'll take the debtors amount, and from those debtors. Now the question is that these debtors, has the bad debt written off already been deducted from them or not? So the provision, it is created on the balance after deducting bad debt that I have to write off. Whatever remains on that amount, I have to create the provision. Okay, so here, going with the solution of it with the marking scheme, we are making the assumption that these bad debts, they have already been deducted, they have been written off during the year, and now this is the closing balance that remains at the end of the year, 54,000. So these bad debts, they have already been deducted from this particular balance, from these trade receivables. So this would give me the carried down balance. How would I calculate it? It would be calculated 54,000 times 4%. And how much is that? 54,000 times 0.042160. ठीक है जी, this is the carried down balance. This would be the sum on the other side also. This would be the sum, and the balancing amount going to income statement, it would be the balancing figure. How much? 2160. Okay, so that was it for 2001. For 2002, what would happen is, we will have 2002, we'll already have a brought down balance from the last year, which is 2160. We will calculate the carried down balance for this year for 2002, and how would we calculate it? The amount of debtors, 58,000 times 4%. How much is the amount? So since this is the bigger amount, I'll note this one down. 2,320, and the difference between 2320 and 2160, 160. It would be taken to, just a second. अच्छा जी, टू प्रॉफिट लॉस या टू इनकम स्टेटमेंट. इनकम स्टेटमेंट लिखा था, इनकम स्टेटमेंट ही लिख देते हैं अभी. लेट्स बी कंसिस्टेंट. ठीक है जी, दिस इज द बैलेंसिंग फिगर. अच्छा जी, that's it for 2002. For 2003, this carried down, it would be the brought down for 2003. अच्छा जी, तो brought down, and how much is it? 2320. Okay, and then the carried down, I'll have to calculate how. 45,000 into 5%. 45,000 into 5%. 2,250. So now the other side is bigger. 2320. We write the same over here as well. 2320. The difference is 70. It would be taken to income statement, and this time it would be income, right? And just to show that this carried down, it would be the brought down for 2004. How much? 2250. For every question in your exam which asks you to prepare a T account, you'll always have to show the brought down balance if there is one. Okay, so for example, for the expenses account, you wouldn't be showing, but for these provision accounts, for these assets accounts, for the liabilities accounts, you'd always show the uh, brought down balance as well for the next period. Acha ji, now how would I prepare the extracts for these 3 years? I'll prepare just for the first year. It would be the same way that we have prepared before, which I showed you before. So for year 3, if I just do it, or do I do it for all the years? So then let's see if I can quickly do it for all the years. For 2001, income statement, bracket, extract, um, operating expenses. I'll show bad debts. Bad debts, how much? Bad debts year 1 were 1340, 1340, and provision for doubtful debts, how much? Provision for doubtful debt for year 1 was 2160, the amount that got taken to income statement, this amount. So it would be 2160. So if I quickly do it for next year, 2020, 2002, again, operating expenses, how much were bad debts this year? So madam, bad debts year 2 were 1720, and the provision, how much did it increase by provision for doubtful debts? It increased by 160. 160. So that's the amount that would get taken to the income statement. As for year 2003, bad debts, they would be in operating expenses, bad debts written off. How much did we write off? 1410. 1410. Acha ji. So I'll show this in bracket this time, and other income I will show reversal or decrease in provision for doubtful debts. ठीक है जी, how much? It was 70. 70. ठीक है जी. So I'll have to put brackets in this one just to show the amount without brackets is the income and the amounts within bracket is the expense. So one would be added in the income statement, the other would be deducted. All right. Acha ji. And as for the statement of financial position in each year, 2001 extracts. Acha ji. Debtors, how much were debtors in year 1? Year 1 debtors were 54,000, if I remember it right. हाँ जी, 54,000. ठीक है जी. Less provision for doubtful debts. How much was the provision? 2160. Which amount would we take over here? The carried down balance of provision for doubtful debt. So 2160, if I deduct from 54,000, 54,000 minus 2160, that gives me 51,840. 51,840. Acha ji, quickly for year 2002, it would be debtors 58,000 less provision, which was how much? Carried down 2320. 2320. 58,000 minus 2320, that gives me 55,680. ठीक है जी. And as for the last year 2003, the debtors balance was 45,000 and less provision for doubtful debts. Doubtful debts. Provision for doubtful debts. अच्छा जी, how much is the carried down balance? 2250. So 45,000 minus 2250, that gives me 42,750.